We have recently seen Nifty crossing 15,000 mark from the lows of 8,800 in March 2020. Along with it, we have also seen steel stocks outperforming Nifty from the market lows. Steel stocks were the best picks among the large caps, giving return of 200 to 450% from the yearly lows. All the top 4 steel companies, that are Tata Steel, JSW Steel, Jindal Steel and SAIL, have outperformed Nifty and also metal index, indicating that steel companies have something special in them during these unfavorable times. So let's see why steel stocks are going up and what is so special about the steel companies. A decade ago, India was ranked 8th in the world in terms of steel output, whereas in last 2 to 3 years, India was emerged as the second largest steel producer in the world by overtaking former steel giants like South Korea, Japan, Russia and US to emerge only next to China, which dominates the global steel industry with more than 55% market share. But in 2020, India's steel output was slacked, whereas few countries had a positive growth in output, such as China, Russia, Turkey, and Iran. It is predicted that the GDP recovery can be seen in the year 2022, which will increase the demand for steel, and India will see positive growth in steel output, which shows steel industry is going to do well in coming years. There are two factors which are in favor of Indian steel companies. Sharp recovery in GDP is expected, which will create high demand for steel in India and abroad. Secondly, with China's GDP recovery, steel prices have seen uptrend since November 2020. However, steel prices in India haven't moved up in last 6 to 8 months, giving enough headroom for steel prices to go up. Another advantage for Indian steel companies is Beijing is targeting zero emission over a certain period of time and boosting EAF output from 12 to 20% by 2025, which will open Asia's steel export market to India, and due to environmental curbs in China, it is likely to increase the steel production cost, and hence it's going to be very hard for China to dump cheap steel in Indian market. The curbs on Chinese steel production and reduced risk of steel dumping will create robust demand for Indian steel companies. Indian steel prices are still below benchmark and hence the prices can go up easily, which can lead to better profit margins. Government's focus on infrastructure can lead the domestic demand post-COVID, and due to price advantage, Indian steel looks attractive for export. With all these three advantages, which are demand, pricing power and less risk of Chinese dumping steel, Indian steel companies are all set to take off. With all these advantages, it would be very interesting to see how Indian steel companies will utilize this to get better prices and margins. I hope this was informative. Let's meet in the next video with more financial and economic knowledge. Please like, share and subscribe. Till then, take care.